Welcome back to the Ticks and Trades channel. We're covering Friday, October the 24th, when they gapped up and found new highs, but today is actually Monday. It's about 8 o'clock Monday morning. I want to get this recap out before I run the numbers for today. We'll come back to this daily chart and talk about what the bulls did. They finally did gap above that 674, so they shattered that ceiling that we've been talking about all week, or all last week. First, we'll look at the levels that were published before the opening bell. You can see those here. And we noted that before the bell, the fireworks had already begun. There was an 8:30 a.m. data release, and that data drop sent price soaring above that 674 area, top of the range that had capped the market for the past few weeks or so. So because of that pre-market surge, the levels were still valid, but I had some caveats. Trade them if volatility and volume seem normal. So basically the overarching logic was the same. If the bulls could hold above 674 and print daily closes above there, they would likely invalidate that bearish consolidation that had dominated the last few weeks. So basically just recommended that traders would seek confirmation before engaging, looking for signals of interim reversals, convergences across multiple time frames, proper timing, things like that. The level at 673.70 was basically the area that price launched from at that 8:30 a.m. data release. So kind of a reference area. No guaranteed support if price fell down to that, but it was worth keeping on the chart as a reference. There was also additional data releases scheduled at 9:45 and 10 a.m., so the tone was kind of set for the day. Possible volatility. My opinion going into the day was it was best approached with caution. So this is what we had going into the day, and here is a screenshot, 1-minute chart with all the levels plotted. By the open, it was clear that the bulls wanted to stay in control. Price surged early. There's a big gap up, as you know. They pulled back enough to give us a base hit right here. We'll talk about that in a minute, but let's zoom in here and talk about how you would have traded these levels per the rules. It was about 9:51 after our 15-minute window. Price came back down, dipped into this level. Following our rules, that was the trade of the day. Quick base hit right there. I mean, they went more than 4 points, but that's the most probable. It was a rules-based long trade of 4 or more ES points, basically. So they came back down to this level again. We're not going to trust this level again. First hit is the best hit. And they came down within 10 cents of this next level, the one at 676.04. And if you adjusted this 5 cents toward price, would not have picked it up. That's a near miss. So when they came down into it again, I'm not going to trust the level, although it did work. But playing by the rules, your one base hit was right there, but clearly you can see that the levels worked. Here is my trading activity. I did not take any trades on Friday. When you see a pre-market surge of that magnitude and know that more data is coming, sometimes the smartest move is just simply to step aside. I watched the morning unfold, recorded this session just for the archives, just for record. But I powered down, shut down around 11:30 as usual, but I'll just show you this and scrub ahead here until 11:30. So no trades means no stress, nothing gained, but also nothing lost as well. I believe there's value in restraint. So 11:30, I just watched it and stopped it on usual time. And the tracking logs look like this. On the PBR, one base hit, that's 4 points according to our rules, and nothing at the next level. We talked about that already, and then no trades for me. You're welcome to take note of where that one base hit puts the metrics that we track. So what does this all mean? Well, Friday's close above that high of the October 10 breakdown candle is significant. It's the first real strike against the bearish case here that we have been following. Additional daily closes above 674 would strengthen that bull narrative. So that said, it would not be unusual to see a spike back below 674 in the near future. Market loves to test areas like that. At the moment, the bear case has officially earned a demerit, but it has not been expelled. Sometimes rollovers include one last breakout before the fall. I'm not saying it's going to roll over. I'm not saying they're going to break out, but possibility is still open. They just fought to get above this area, and now they have to continue to maintain that. I'm talking about the bulls for another leg higher to materialize out of this type of price action. So time will tell. So this week and the next week should make that verdict clear. And I will say also, we've been saying all along that the SPY was on edge, and Friday we saw exactly what happens when price and time converge. This week wraps up the month of October, and if history is any guide, we may still have one more surprise left in this month. So we will see. It could be kind of fun. So that's a wrap for Friday, October the 24th. Thank you for watching. As always, stay patient, stay disciplined, trade well. I'll try to get this recap out before the opening bell, but I've got to run the numbers for Monday, and that will be the next video. Have a great rest of your day.